Welcome to Legacy Therapy, the podcast that will teach you, in bite-sized chunks, how to leave a stress-free legacy so loved ones can focus on people, not paperwork, when you become ill or pass away. Here is your host and financial advocate, Stacey Golden-Lisnock.
Hello, and welcome to the 5th episode of Legacy Therapy, Planning Techniques for a Stress-Free Legacy. Welcome, and today we have a very special guest. This is a longtime friend of mine and co-worker for some years, Bill Lorenz. Bill has nearly 20 years of experience in the insurance industry, and he has lots of stuff to tell us, some really cool stories. Although he has clients in all lines of insurance, including life and health and commercial lines of insurance, he has concentrated most of the time in helping individuals and families with life insurance for financial protection. And he's one of the senior agents with Promark Financial based in Orange County, California. So welcome, Bill. We're going to have a real good conversation here about life insurance.
Thank you. Thanks for having me.
You're welcome. This is a conversation people always want to have, right, about life insurance?
Oh, yeah. It's their favorite thing to talk about.
Great. So I want to hear some good stories that you have that you want to share that will enlighten. Go ahead.
Yeah, Stacey, I got a story for you. I was working with this couple in LA, doing everything by phone. And, normally we do electronic applications, paperless applications, and it's very streamlined. But this particular couple, 65 years old, they'd had policies for 20 years and just had just now expiring. So they're got it when they were 45 and they're now 65. They wanted to do just things kind of like old school with the old paper applications and have me mail it to them. So we took all this information, it took half an hour probably to get both of their information on paper, put it in packets, mailed it out, went to the post office, put in a return pack with return postage on it and did all that rigmarole. They never sent them back, and it was a lot of work. And I call them up and I say, hey Herb, what happened? I never got these back. Is everything okay? And he said, well, actually not really. He goes, we both came down with coronavirus, and they both got hospitalized. She was on a ventilator, he was on just a breathing machine, but they're much better now, fortunately. They're back home and they're getting their life back together. But unfortunately, when you get hospitalized, especially something like coronavirus, especially when you're on a ventilator, the insurance company is not going to issue new coverage. So they're going to have to wait. They got postponed for 6 months, and we're going to have to get back in touch with them in 6 months. But so I guess the lesson to be learned on that story is get things done. When you decide you're going to get insurance, don't dilly-dally, as my dad used to say, just, get it done. And because once it's issued, you're good to go. You could get sick and die the next day. But once they issue it and, so if there's a turn of events or an accident, it doesn't matter. Once the policy is issued, you're good to go. So,
okay. So let me start out first by asking you a little bit about how you came to be an insurance agent, by the way. Because people don't usually decide that when they grow up they want to be an insurance agent. So what's your story?
Well, my story is I actually studied to be a software engineer. I got my computer science degree. I started working for software companies, and I did that for 16 years. And I really enjoyed it. It was a great field, and everything was going really well until early 2000 when the .com crash hit. And everything kind of went south at that point because whereas these companies were hiring everybody they could get their hands on in the late 90s when everything was booming and the stock market was on fire and .coms were flying high, when that all came to an end with the .com crash and the market crashed, they now had to go back to their stockholders and say what they were going to be doing to make sure that this never happened again and
Sure.
So their stock didn't get crushed any further. And so they ended up laying off a lot of people. I had myself and many of my friends, all of my friends basically, especially us in sales and marketing, were the first ones to get laid off.
That's right.
And so I you go work for another company, and then 6 months later, 3 months later, whatever it is, another round of bad numbers comes out, and then they lay off more people. So I did that 3 or 4 times, and I had enough of it.
Yeah.
I remembered my friend He was my neighbor, and he got into the health insurance business when he was about 3 or 4 years prior to this event, this .com crash. And he came to me and said, "Hey, you're a software guy. Can you help me put up these quoting websites for my health insurance business?" This was like brand new for like in 1995 timeframe, when there really weren't too many online quoting engines, quoting sites back then. So he was kind of in that first wave. So I helped him put up the first website. It was a smashing success.
Wow. I didn't know this about you, Bill.
You did not know this? Yeah, this is my former life. And I watched him do all this. And so when I came to the end of my software career, I decided it was time to get into the insurance business. You have to take your 52 hours of insurance class.
Yeah.
And so I went to this class, and they started talking about life insurance. It turns out that this class, even though it was life and health insurance, the majority of it they talked about was life insurance. And I really didn't know much about life insurance. I was, a young guy. I was married. And when they started talking about life insurance, what really grabbed me was when they said, life insurance creates an estate in an instant. And what they mean by that is, and she even gave the example, you're working late one night, a little tired, you're driving home, you don't make it home. You have an accident, that's it. And if you have life insurance, whether you were living paycheck to paycheck, it doesn't matter. If you hadn't built up all the years of working to amass some money from your family, they now had that money. It was done in an instant. That estate was made in an instant. So that really hit home hard. Like, I'm in that position. I don't have my family, my retirement set up yet. I was a young kid, and that stuck with me to this day. So that's how I ended up veering towards the life insurance side of the business.
Right. Yeah. And it definitely is not a get rich quick scheme. It's a protect your family against the odds, right? Opportunity. Because people true. People die every single day. People don't make it home every single day, a percentage of them. And if they haven't done anything to protect their families are then floundering, for a better sense of word, which is really a sad predicament for people to be in. I mean, can you imagine?
Right.
Like nothing that you know as a kid would exist if your father or your mother or somebody that was the breadwinner or whatever.
That's right.
Yeah, and then it became where it's a two working household, 2-income household, right? And so now it wasn't just that the husband or the breadwinner was the important one to insure, but the other, the one thing that I remember a lot of times is people never wanted to insure their wife, their stay-at-home working wife. She doesn't bring in money. What the heck? Why should I spend money on insurance for her? But
especially when you have kids, it's an extremely important job, and it's not something that you can do if you're a busy executive and you're going to work every day from 8 to 6, 7 o'clock at night. I mean, simple things like walking the dog. I mean, that takes a person to walk a dog, Right. And, but, caring for kids obviously is even,
right.
more important. Who's going to do that? You're going to have to hire somebody to do that. It costs money. You have to hire somebody to walk the dog. Costs money. You have to hire somebody to keep the house clean. Costs money. And then you're not going to want to come home and deal with all those things at 7 o'clock at night. You're just tired. You're brain dead. You don't want to have to go home and deal with anything other than just what you normally deal with, which is bringing the bread home.
If you can emotionally still do that job, because a lot of times I know people are a wreck if they lose a spouse, and or it could have been a situation where one was hurt and the other one actually succumbed to an accident or something.
Right.
So you just never know what the scenario would be, and you just never know when that day will come. So the whole reason behind my kind of leaving the insurance business, the financial services business, to do what I'm doing now, which is create an online course, which gets people motivated to take action, to actually get their stuff in order. And when I'm talking about their stuff in order, I mean, making sure you have all your legal documents, making sure that the people that are around you that would be in charge of you, should you become unable to care for yourself, know where everything is and how to pay the bills and how to access everything. But if you were to pass, that they know how to get a hold of everything and how to access all of your, the things that sometimes only you know. Right. And so when I got sick in 2018 and I had time to think about all this stuff, I realized, hey, something actually really happens to me here. Nobody knows how to move money from this account to that account to pay this bill, to pay that bill. It's just not going to happen. Everything's going to bounce left and right. So,
right.
Even though I do have a lot of life insurance, it would not be in the accounts where the bills are getting drafted every month. So
the other thing is just what do you want your family to know when you're dead, And this guy said, I have this little thing I do. I've always done it since I've owned life insurance. He says, I write a letter to my family. Tell them how much I love them. Tell them just what they meant to me, just little tidbits. And they put it in a letter, and it's basically because you can't write your last letter to your family before, right before you die. I mean, it just doesn't happen that way, right? But if you know it's your last letter and you're writing it for that intent and purpose, it's just a nice way that you can say goodbye. Maybe you tell them a couple things. Don't forget the combination to the safe.
Don't forget to walk the
password
dog.
To this account or blah, blah, blah. You can kind of throw some things in there too, but just telling your family that, if you're reading this, that means I'm gone and here's what I wanted to say to you.
Yeah, I know. And that's part of the course too. There's a section of that about like how you want to be remembered, and you can actually do video now. So you do video, you can upload your video to a vault where it's in safekeeping, and then upon your death,
oh,
they can
nice.
go video and see. And so they do.
I would have never known that, Stacey. These are some great things that we're going to get out of your course.
Yeah, and I mean some of
Little
these
nuggets.
things, like the healthcare directive, which is, what do you want your final, do you want to be resuscitated? Do you want to be intubated? There's other things that you don't even think about. Like, do you want the room filled with flowers? Do you want a certain kind of music in the background? Do you want sports on the TV? Do you want certain people not to be allowed in?
Yeah.
Because even in a coma, you will feel their negative energy. Like, who would have even thought? Because, there's people that they insist on seeing you on your deathbed and you don't want them even in your life, but they want to come in and view you while you're dying. And if, you know what I'm saying? Right? There's
Absolutely.
just certain people that are just that much a thorn in your side. So that whole energy that they would bring to the room would be disturbing to you. So you let that be known. So there's lots of things like that. The other thing is, this healthcare directive that I'm directing people to, it's free and everything else. I just want to kind of put a plug in here because everybody should have this done. Even if you're 18 years and up, you should have this done. Because if you should become in a situation where someone needs to speak for you and your health decisions, they should all know what your decisions would be instead of having it be a fight between the different facets. So I don't know if you remember, Terry Schiavo was a case back in the 90s. It went 15 years all the way to the Supreme Court because
I do remember
the
that.
husband, so she was young. She was 26 and she suffered from sort of like a stroke or something, and she became unconscious. And for 15 years, like after a couple years, the husband's like, she wouldn't want this. She would not want this. Let's disconnect. The family, right? The mother, the father, the siblings are like, we're not letting her go.
Yeah.
So it became this fight. So you don't want to have that be a situation and put people in a situation where it just basically then takes up their whole life, right? Their whole life became that. And that's what you can do to people if you don't have your documents ready and prepared, because then they end up in probate, they end up in arguments and fights and court cases. And then the whole life becomes about that.
I can see that.
Really
I can see that happening.
Fair.
Absolutely.
Yeah, it happens all the time. So, all right, I know you've seen lots of things. Tell us some interesting things where life insurance planning and beneficiary changes and things like that.
You should remember this story because it was your business partner that, and I remember she told us this story. We had our Monday morning meetings, and she told us this story. It was amazing. It was sad, but it was an incredible story that she had gone out to review her client's policy, and she got out there and determined that he was divorced. I'll make sure I get the story right. So his ex-wife was still on the policy as the beneficiary. He had been divorced for many years and estranged from her.
estranged, exactly. Some people get divorced and they're still friends.
Right.
They part ways in an amicable way.
Mm-hmm.
And this one, as I remember, it wasn't amicable.
No, right. So estranged and didn't want to have anything to do with her. His daughter should have been on the policy, and he wanted to put her on the policy, make sure that the wife didn't get the money because they didn't get along.
Right.
And while she's out there and talking about this, he's getting so emotional talking about the problems he had with the ex-wife and the daughter, how the two of them don't get along, and wants to make sure this change takes place. And he gets all worked up, and he has a heart attack while she's out there. She's on the phone calling 911, getting the neighbors, this and that. He was, I remember she said he was standing next to like the mantle, and he was holding on to it because he was basically having a heart attack. And then he eventually fell to the ground, and the paramedics came in and they tried to revive him, and they were not able to, and he died on the spot. And she had just uncovered that he needed to change his beneficiary and didn't get around to it. I mean, literally within minutes didn't get around to it.
It's right. And the other thing I remember about that was she was actually early to the appointment. She was like a half an hour early, and she had called him and said, "Hey, I'm early. Can you meet with me now?" And he said, "Yeah." And then so she goes up, and it's like amazing because if it had been on time, he just would have been a no-show. He wouldn't have answered the door or answered the call or anything, right? So how long he would have been laying there on the floor, who knows?
But that just goes to show you that you can't delay. You have to be organized. You have to know what's going on. We call people up all the time. We call our clients because we've been in business 28 years now here at ProMark. And we have a lot of clients, and it takes a long time to get to these clients to let them know what's going on. And, people 10, 15, and we have people that have been in the books 25 years, right? So, or longer. And it's hard to get a hold of those people. They're, the phone numbers they had back then, even 10 years ago, are not the same. Those phone numbers are now fax machines, or they moved and never, now everybody uses cell phones, and we don't have anybody's new phone number. So it's a full-time, literally a full-time job getting the phone numbers for these people, getting in touch with them to let them know that they have a review coming up on their policy. Right. And many people are all for it. Great. Yeah, let me know. Some people are like, look, I bought a term policy. I don't need help with it. I don't want you coming out here. You're going to try to sell me more insurance. But it's just these kinds of things. We have people that are paying for child riders that the kids are 25, 30 years old now. They're paying for something that they don't even need, that doesn't even pay if they die. And
that's right. That's a huge point. And I never understood this, why the insurance companies don't have a way to just stop charging them when the youngest.
I think I figured it out. I think I figured that you could still be having kids. You could have had a second, marriage.
So it covers all of your children, even if you don't have them listed on the policy.
It covers all children. That's all it says is children are covered. So I guess that's why, because they don't know how old your kids are.
So this is the thing. As an agent, I'm just kind of giving a little insight here. So as an agent, you find out that the child is now 30 years old, and they're paying every month $5 for this rider for all these years, which adds up. I mean, $5, right? It's $60 a year. You do that for 10 years, that's $600. Whatever, it just adds up. You're getting absolutely nothing for it, your money. As an agent, you're not getting anything for it either, except for you're spending your time getting them, filling out the paperwork,
right.
Getting them the paperwork, bugging them to get you the paperwork back so that they could save money. Yeah. Right? Sometimes you're trying to help people, right, and they don't realize you're doing this out of the goodness of your heart. You don't get paid for this. Right? And
a good bit of the work we do is pro bono work.
That's right.
We go out there, we try to show them ways that, as an example, somebody's term policy, what's going to end. They're healthy. They're going to outlive it. There are ways, or maybe they're not healthy. They're not healthy, and they don't know that they can convert that policy and keep it forever. But they're going to let it run out, and then they've got MS, or they've got some kind of debilitating disease, heart stents, things like that. Had a TIA stroke or a major stroke or whatever. They're no longer going to be able to get insurance. And
they can keep their preferred policy if it was issued
at a preferred rate. They can replace it with a
however
permanent
it was.
policy with no questions asked about health. So there's so many things we go out there to help them with, to show them the way.
Yeah. But I have to say, Bill, so I know we're honest agents and we were trained really well at ProMark on how to do it the right way, not replace something that's perfectly fine, not lie about things. But I've had clients of mine, the ones that I've caught, I know about. I don't know about the ones that I didn't catch or that they didn't call me. But I've had ones where they've called me and they've said, "Oh, we had this other agent come out and they told me," or they canceled the policy. And I'm like, I call them and I say, "Why did you cancel this policy? This was a permanent policy. The age 100, the premium was never going to change. This was beautiful. This was wonderful." "Oh yeah, we had somebody else come and they said that no, that the rates were going to go up and that it was a bad policy and this and that." In this one particular case, I got the whole thing reversed because they were, and I threatened to report them to the insurance department because they just flat out lie to people. So people out there listening, if you're ever told by somebody else that isn't your agent that you have a horrible policy, you need to talk to your agent and have them show you in your policy what kind of policy you have, or call the company and ask them to explain the policy to you, because this was a perfectly policy that was never going to go up in price. And they told them it was, and then they replaced it with a policy that was more expensive that didn't even go to age 100. I mean, it was like the biggest scam.
Yeah, it totally did them a disservice. And people don't, unfortunately, people don't know how the insurance business works. There's just too many moving parts to understand it all. And even us, when we find a policy that we think is not performing well, it takes a lot of legwork to find out. You have to call the company up that issued the policy. You have to get what's called an in-force illustration to make sure that it's viable or not. That will tell you if it's viable, but it's a lot of work. It takes days. It's not something you get in one phone call. You just put in a request and you have to wait. So, Oh,
I know. Some of them take 15 business days in order to turn around a report. Other ones have it to you in 2 hours. It's just the most unbelievable discrepancies. But I mean, the thing of it is, a good agent will do that because they want to do the right thing for the client. And if you have a good agent that does that, that's very valuable. Because life insurance is a lifeline. I mean, it really is. It does. I had written down some things and see if you agree with this. If a person dies and they don't leave financial stability for their family, not only has the person died, but what else have they done to that family? Right? They've damaged them psychologically, right? With overwhelm. The idea that they don't have money, like how are they going to continue their lifestyle? How are they even going to eat? How are they going to pay for their car insurance and their home? How are they going to?
Could have made them homeless at some point. They run out of money.
Yeah, and put them in harm's way because they're not street people. They don't know the ways of the street. And if you get booted out into maybe even a less safe area that you have to live in or negotiate, or have to start taking public transportation because you can't afford your car anymore. You can't afford the car payment, so you have to sell the car.
The kids lose all their friends. They have to make new friends, maybe in a neighborhood that's not as safe as you mentioned. Yeah. So it's a big. It can be really debilitating for a family that's got kids that are growing up and. There's a lot of things we could talk about on that as far as like how bad your life could be. You've just lost somebody that was a loved one in the family that provided for the family, and it was probably a very important part of the family, and that's stripped away. So now you're overwhelmed with the ability not to have what you used to have and just being able to survive, right? So your stability is all there, but it doesn't allow you to have that mourning healing. Like to be able to heal, you have to be able to mourn the loss, right? So it doesn't even give you that. But then, you could look at the other side and go, some people are like, "Oh, I don't know. My kids are so spendthrift. They'll just go out and buy Maseratis or whatever." Right. Like, so, I mean, there's people that they get the big money and they've never had money. So they just blow it. And that happens with inheritances all the time. You know that, right? The inheritance takes your whole life to save this money, and and you frugally use it, right? And then your kids get it or your grandkids get it, and it's like it's gone.
In a year, it's gone. Everybody's their best friend, and then they spend the rest.
Right.
But so that's always a thing about the money being mishandled, but that shouldn't be a reason why people don't provide, because there are safeguards that you can put in place through this estate planning, where there's different kinds of trusts. I mean, if you don't trust anybody in your family to be your successor trustee on a trust, you can get a hired fiduciary.
Yeah.
I'm running into a lot of these people. It's becoming
a
very,
hired
very
fiduciary. I've never heard that term.
Yeah, they're legal. They're not legal. They're it's actually a designation that you are registered. You're a registered fiduciary, and you're bonded and all that. Yeah, and so that's what you do. And it's much needed, because there are so many people that have nobody that they can trust to actually handle their estate. And sometimes they do have good kid, bad kid. The good kid doesn't want to be put in that position to have to deal with the bad kid, right? So why would you do that to your good kid? So it's like, get a hired somebody.
That makes sense. That makes a lot of sense. I mean, there's a lot we can talk about when it comes to beneficiaries, and, having young kids, and, what do you do with the young kids if you're a single mom? Do you put them on the policy, or do you not put them on the policy? I mean, we tell people the best way you can do that is to get a trust, right? It costs money to get a trust.
Well, no, you name somebody that you can trust to be your beneficiary for the benefit of the children. And it doesn't necessarily have to be the person that you would pick as the guardian. Sometimes it's best to have two different people. Somebody handle the money, somebody handle the raising of the kids, because sometimes people will take your kids because they know it comes with money, which is what happens a lot in the foster care system, right? It's people, they're not really fit to be fostering, some of them, and some of them are very loving and they're doing the right thing. But there's good insurance agents and there's bad insurance agents. We could go through that game all day long. But yeah, there's the thing about people naming their minor children. That's another thing we should bring up. Bad problem, because your children, if they're under 18, will not get this money released to them until they are 18.
Right.
And the only other way they can do it is to go to court and get a release. And from last I heard, it's around $4,000 to get whatever it is
exactly.
that you have to get this. So now, not a good thing to do.
I get that question a lot, Stacey, about the underaged beneficiaries, and I did some looking into it, and there is there's something, and different states have different names for it, but there's something called a Uniform Transfer to Minors Act and the Uniform Gifts to Minors Act. And it's not only insurance, it's for inheritance and those kinds of things. But essentially, what this does is the insurance companies have a way to designate a person as this custodian. And what they do, so you name this person as their custodian. So what it does is it bypasses having to go to the courts after you've died and assign somebody, because that's expensive, like you said, and it uses up that money. So by designating them as a UTMA, Uniform Transfer to Minors Act custodian, you can now assign them to take care of the money. Now the money stays in a trust that the insurance company holds, but this custodian can designate you actually designate when you set them up what they can do with the money. But let me back up. You don't, once you die, you don't have any way to say how the money's going to be spent, but you're going to put somebody in there that you trust to spend the money the way it should be for the child. When the child turns 18, it automatically transfers to them, as opposed to a trust where it stays in the trust, and then you can set up a trust to divvy the money out whenever you want, however you want, by event, when they get married, when they have kids, when they graduate from college, when they graduate from high school. So you can say, they call it parenting from the grave, where you can say how that money is used. Now, that's setting up a trust, and that takes a lot more work, and you have to have a series of people that are trustees that you trust, or like you said, you could put this hired fiduciary in there. But there's different ways of doing it, but the last thing you want to do is just name your 4-year-old as the beneficiary.
Absolutely. I know. And it's like, if we just went back through the books, we would find minor children listed, because there's agents that don't know any better. Agents come and go into the business. It's rare to have somebody like you and me that have been in it for so long, because people try their hand at it and they sell a few policies here.
It's not for the faint of heart.
That's right. Yeah. And it's just one of those things. I just love it when people say they don't believe in life insurance. And I'm like, wow, I didn't know it was a religion. But for you not to believe in protecting your family, that's a travesty. So I don't understand those people. Never have.
Well, you hear those people say, you know what, that's so expensive, $150 a month. I'm just going to put the $150 a month away, and then I'll just save it on my own.
Far? So, have you done it so far?
Have you done it so far, A? B, when you die, it gives you the money that you meant to save, right? I meant to save $100,000. Well, this is the money you meant to save. You only lived another year and a half, but here's the $100,000 or 500 or a million or whatever it might be.
Yeah, I always did that math for people. It's like, look, at this amount of money per month, so much per year, it would take you 54 years to save that amount of money. At 54 years, you'll be 103. Do you think you think this is a good deal? Yeah, you're trading money with the life insurance company, but you're going to be coming out the winner. I mean, you're not, because you're going to be dead. The people that you love and want to take care of are going to make out. So I don't know. I like it. I always liked it. And I'm glad you're able to come on and talk about it, because people just don't have these conversations.
I'm glad to be here. Thanks for inviting me.
Yeah.
That brings up another point. Speaking of the people that want to save the money instead of actually buying the life insurance, I had a lady that had a policy with us for a long time, and the policy came to an end, and she was now too old and too sick to get another policy, a regular policy, normal policy. So I did bring up. I said, well, what's your plan then? She says, well, I want to leave about $15,000 to my kids and my grandkids, and here a little bit here, a little bit there. I said, well, how are you going to do that? She goes, well, I've got $1,000 a month that I can put away. And yeah, she had $1,000 a month she was going to put away. And I said, well, okay. So, and I think she wanted to get up to like $30,000 or something like that. And she was elderly, and I said, well, I have a policy it's called a final expense policy, small amount of coverage. It goes up to $30,000. I said, but if you take that $1,000, the cost for her was about $290 a month. I said, take the $290, put it towards insurance, take the other $710, put that in your savings, and then if something happens and tomorrow you're no longer with us, the money is going to be there for them. And you're only spending $290. You're going to spend $1,000 anyway. Why not let the insurance company bear the majority of that if something should happen?
Right. Did she do it?
And she did it. Yeah, she did it. She was really happy about it.
It's very nice when people see the strategizing that we do and they do it, because I know with some of the bigger policies, sometimes people, they don't really understand what they're getting into and what they're doing. And then someone else will come along after you and unwind the whole thing by telling them, why are you spending $1,000 a month on this insurance policy? I could sell you the same policy for $49.95. Earl Scheib. No, but they're basically not comparing apples to apples, because there's these new policies out there, relatively new, the IULs, right, where you can overfund and you can actually use it for retirement income, or make yourself the bank. You can borrow off of it, and there's all kinds of things you can do with these indexed universal life, but you overfund them. You take a small amount of insurance relative to the premium. And so if there's an inexperienced agent that comes along and says, why in the world are you spending $1,000 a month
they just don't get it.
$250,000 of coverage, or whatever, $1 million of coverage, or whatever. It's when I could get you that $1 million of coverage for like $100 a month. Well, and you're paying $1,000, so
yeah, and the way those really work is that if you're spending $1,000 a month for your 401k, anyway, well, what happens in 30 years when you retire? What's likely to happen with the tax rates? Are they going to go up, or are they going to go down? They're going to stay the same. It's probably going to go up, right? I imagine.
Yeah, we're in a very low tax bracket. I mean, relative to history. So yeah, I would think up.
And some of these plans that you're talking about, all of them, really with the Index Universal Life, they build so much cash value that you're allowed to take tax-free loans to yourself, loans that never run out. The money just keeps coming in. We tell you exactly, to the penny, what you're going to be able to take out of this policy in 20 years from now. And so you got your Social Security paying you, $2,000 a month, and you've got this paying you, another $1,800 a month. So you piece this together, and you've got this income that goes for as long as you live with a death benefit to your family.
And no big tax bill with it, because that's what people all complain about. I mean, in my financial planning business, people, they're almost all now in their 70s and 80s taking the money, and they all complain about the taxes.
All right.
It's like you didn't complain about taking the discount when you got to write off like funding the IRA and funding the 401k. You didn't pay the taxes, but now you have to pay, and you're complaining because you didn't really get what was going on, right? But with the IUL, it's a lot like a Roth, but it has, other benefits.
Pay the taxes up front, right?
Right. After tax. So you've already paid the taxes on it, and then you get to invest it, and the wrapper is the life insurance that makes the growth not taxable. And then you take the income.
And by the way,
as a loan.
If you die along the way, the death benefit puts all that money into your retirement that you would have normally had to save for 25 years.
Yeah. You know what I find really fascinating about that is that people in our age range are funding those, right, for their kids.
Oh,
right. So
I've heard that.
So yeah. So like when their kids are ready to retire, when you die, then that's with the money that they get for their retirement. So sometimes the kids will actually fund their parents' insurance, because it's going to be tax-free money, and it would be a huge amount of money that would come. And
so the kids will buy the parents the policy,
be
the owners of it, and then be the recipients of it.
And the beneficiaries, Yeah, because the parents will be dying if they live a normal life right around when the kids are 40 and 50, 60 years old, right? So if they're 60 and, you're 85, 90 years old, that's about when they're going to be retiring. But it looks like the way things are going, people aren't going to retire so soon. Like, right? With what's going on in the economy, I don't know that we're going to have that luxury.
True. Yeah, we're not, at this point, no, I don't know anybody that's jumping up and down to retire.
Well, yeah. They're jumping up and down to figure out how they're going to pay their bills. All right. Well, I think this has been really, really fascinating, talking about life insurance. We'll have to do it again sometime.
Great.
And
thanks for having me.
On. Yeah. Is there anything else you'd like to say? If people could get a hold of you if they wanted to talk to you about insurance or?
Yeah, so the easiest way to get a hold of me is at lorenzinsurance@gmail.com. That's LORENZ insurance@gmail.com, or just pick up the phone and give me a call. I'm at area code 949-394-7676.
Yeah.
And again, if you have an old policy and you're worried about it running out, or if you just don't have any insurance at all and you just want to make sure that you get it covered, don't sit around and think about it for too long, because just like that client of mine, the couple in LA that waited too long and came down with COVID-19. It's important. And once your health goes, that's it. There's no going back. You want to protect your health and you want to get it taken care of. So give me a call. We can discuss. I'll answer any questions you have, and we'll go from there. And I want to say, Stacey, in addition to thanking you for having me on, I think you're doing an amazing work in helping people to get their paperwork together, to get their lives straightened out, to have that perfect legacy. And the people that I told that I was going to be on this podcast, not just a few people that I happened to mention it to, they all thought, wow. When I said what your podcast is, they'd never heard of the concept, and they were like, that's totally what I need. So
everybody needs it. It's just we got to bring them through the right door so that they understand that they need it, right? So just saying that because some people are really all about their pet. Well, let's talk about what's going to happen to your pet if you should all of a sudden become disabled or can't care for yourself or pass away. Is your pet going to then be euthanized? Because that's what happens to most of them.
Well,
I mean, you got to have this stuff in advance. What your kids need guardians. There's just so many things.
My brother used to joke with our dad. He used to tell him, "Hey, Dad." My dad was like about 82 at the time. Your job in life is to outlive your dog's life.
Yeah, absolutely. I just don't know why it isn't an industry in and of itself, because you have like what we were doing with the life insurance and the investment, and then there's the attorneys, and then there's the accountants, and there's all the different people, but nobody pulls it all together.
Yeah.
And so that's the concept here, is like, let's just pull it all together.
You're the person to do it.
I am, and I'm doing it. And you know what? I had to get sick first for me to realize that I need to do it. So here we go. There's always the silver lining.
Yeah. No, you are by far the most organized person that I would put to any job that needed organization. So,
well, thank you.
I know you'll be very successful. And again, thanks for having me.
All right. Well, I want to thank everybody for listening, and be sure and check out the other podcasts. Yeah, you're early on, and we'll have you back again when we have hundreds of these in the pile.
Okay.
But thank you again, everyone coming to listen, and be sure and check out the website, gotittogethernow.com, and you could be on the wait list for the upcoming course, Got It Together Emergency Info File, which what that is, we were talking about a little bit on this podcast, but it's pulling everything together that you have already in place, filling in the missing pieces, and then organizing it all, making sure it's updated, making sure you have the beneficiaries correct, and all of those things. So it's a 7-module course. There's 3 bonus modules in the course. And right now there is a wait list on the website, gotittogethernow.com. And we look forward to working with you on that and making sure that you have a stress-free legacy. So this is signing off, Stacey Golden-Lisnock, your financial advocate. Have a good night.
Thank you for listening to the Legacy Therapy Podcast. If we hit it out of the park today and you learned at least one new thing to take action on in your own quest to planning the best legacy possible, then be sure to tell your friends, subscribe, and rate and review wherever you get your podcast. The show notes will provide the sites and information that were discussed today. You can get more great tips, resources, and inspiration by visiting our website, legacytherapypodcast.com.